Leo, can you please tell me why you decided to invest in mobile home parks rather than investing in what we consider traditional real estate?
Yeah, I get asked that a lot, Teresa, because it doesn't really make sense from a fundamental perspective. Most people haven't heard of mobile home parks, right? I think there's a changing stigma to it. The perception of it is changing, but the real reason is twofold. So, one, that there's a lot of characteristics of mobile home parks that make it a really compelling investment, at least for me. That's why I do it. And the other reason is that there is a social component to it because mobile home parks, they're some of the lowest cost forms of housing out there that's not government subsidized. So being able to provide affordable housing is something that means a lot to me because when I want to work, when I want to build a team, I want to make sure that it's doing something good for the community.
Okay. Well, that was a great answer. And many people probably are not familiar with mobile home parks. I am familiar with the mobile home park because believe it or not, I moved out on my own and I was probably 20 or 21 and my first home that I purchased on my own was a mobile home in a mobile home
Wow.
park.
Very
But there are
cool.
so many people now, especially if you live up north or in a
Yeah.
congested city, you have no clue what a mobile home park is. You've never even
Mhm.
seen one before.
Right, right. Yeah, they're unassuming. Like a lot of people, just like talking to people in my career, they're like, "Oh yeah, coming to think about it, I think I have driven by one before." They just don't
Mhm.
really pay attention to it because,
Mhm.
yeah, I mean, it's kind of tucked in. There's like trees behind it, but it also looks like a subdivision. So like people don't really think twice.
Right, right. Well, listeners, if you want to invest in something other than the traditional way, like apartments or single home families, I encourage you to listen to this episode. Mr. Young has been doing this for a while, and we're going to give you some valuable information. And I want to welcome everyone to Bartell's Money Talk. Thank you for joining us. And at this time, Leo, can you please introduce yourself and tell us about you?
Sure. So, my name is Leo Young. I'm the founder and managing partner of Cornell Communities. We are owner operators of mobile home parks, or you can call them manufactured housing communities as well. And what we do is we purchase these existing mobile home parks and we revitalize them. A lot of them, they're old and there's like a lot of deferred maintenance. So we go in there, we clean the place up, we make the place a better place to live in for the residents, and we also deliver the investor strong risk adjusted returns.
Okay, so this is my big fat question. Okay, and like I said, I'm from the South. And a lot of stigma comes with someone who lives in a mobile home. Like they judge you because you live in a mobile home, and some people call them portables.
hmm
How do you get rid of the stigma that comes with people living in mobile homes?
I'm very fortunate in that, by right now, 2026, like a lot of the industry path has already been paved by the bigger, private equity firms, the Wall Street firms of the
Mhm.
world. So, they got into the space 20 plus years ago and they started changing it. They cleaned
Mhm.
the properties up a lot. Gradually, the stigma started to change. They used to be called trailer parks. You're like, oh man, like a,
Yes.
a bunch of like unsightly people or like people dealing drugs or some sketchy or something like that.
Mhm.
But now they clean it up. I'm not saying like every one of them, but it is changing gradually as more investors they put money into it. And another thing too is, I mean, right now with housing prices so high, people are just looking for sustainable options to get into owning their own home. So younger couples, I mean, we're seeing this across our portfolio. Younger couples, they're coming, they're moving their family in because they're like, wow, I mean, I can get a home for a fraction of the price of a regular, stick built home. And I don't
Mhm.
have to worry about pumping my septic or like maintaining any of that. So to them, it makes a lot of sense.
Yeah, and it does. And the housing and the cost with mobile homes, there is a huge difference. And like I said, my very first home ownership was a mobile home. I had like a single wide, three
Wow.
bedroom, two bath, and thought I just had it going on but they're making a much nicer now than they did when I bought mine like over 30 years ago.
Yeah.
So
Definitely.
you said you go in and you purchase these lots, right?
Mhm.
So when you purchase these lots, are the people renting the mobile homes or do they own the mobile homes? How does that part work?
Typically, we like for the residents to own their own homes. That way, it's kind of a win-win. So, when they own their own homes, they take care of the maintenance for us. So, we don't really have to worry about it. And, mobile home parks, it's a kind of commercial real estate. So, commercial real estate, the value on it depends on how profitable the property is. So, when you take out a certain degree of maintenance, of insurance costs, that makes the property more profitable, makes it more valuable for our investors. But for the residents themselves, they get to make the home their own, and they get to pay down the note or whatever that they have on it and own something eventually. And the cool part is that because for our projects, we budget a lot to improve the community, they actually increase their equity just by sitting there because we're
Mhm.
improving the property and making it a more desirable place to live.
Okay, and so of course that makes me have another question, which I think the listeners would need to know. Maybe if someone they might be listening, like not to invest in a mobile home park, but they might be considering purchasing a mobile home. So,
Sure.
in the instance in what you do, if someone purchases a mobile home and goes onto your lot, they never own the lot, correctly? They lease it. Is that right?
Exactly, exactly. So we maintain the grounds, so that means just like the roads, the utilities, common area lighting, etc. So they own the home on top of the lot.
Okay, they just will never own the lot itself. And
Correct.
so before you allow people to move in, do you do like background checks and all of that? Or are you kind of like, well, if you can pay, you can move in?
Yeah, yeah, definitely. We do screening for our residents because we want to make sure we're bringing in good people that are net positives to the community. Because end of the day, it's like there's people living there, and if I was living there, I would want to know who my neighbors are. I wouldn't want like some sort of random bumpkin off the street. You're like, oh man,
Hmm.
that's like detracting from the community.
Right. And so, how I want to lean in too off of that, like I mentioned at the beginning, some people have never heard of mobile home parks. And so, when you purchase, it really has to be by location, right?
Mhm.
Because you cannot have, like where we live, you cannot have a mobile home. They're
Yeah.
all, the traditional homes. How do you go about finding these mobile home lots?
Mm. It's hard, I think the trouble or the challenge is finding deals that make sense because we look at things from an investment perspective because we want to make our investors money and make it worth their while. So a lot of the pricing for mobile home parks have gone up a lot because basically like the secret's out. These are investment grade assets. It makes a lot of sense. It's like very stable income for the people involved. So um it's hard to find it, and people aren't building anymore, or at least municipalities are not really approving a lot of these projects because it's just such a the math just doesn't make sense for them because it takes around 5 to 10 times more in tax costs to service a family than the tax revenue that they bring in. So if you're thinking about this, you're paying $1,000 in taxes to the city. They're spending $5 to $10,000 to service you for living in a mobile home park. So it's a massive strain on their budget. They have to factor in like the schooling system, police, fireworks, public works, utilities, etc. And it's just like a big burden for them. So they don't like it. It's getting harder and harder to find. And yeah, we're looking hard for good opportunities.
Okay, so sometimes you might have to even go outside of your state. Do you
Oh
invest in
yeah.
properties that are outside of your state?
Oh yeah, yeah, yeah. We're I think in 8 different states across the southeast and the Midwest. The nuance with mobile home parks as like an asset class is that there's a lot of it's just like misunderstanding or like ignorance of the industry, like that people don't know better. But there's a lot of regulations that make it difficult to offer this kind of housing. End of the day, it's like we're in the business of affordable housing, and like some regulations just make it tougher. So we try to avoid certain states for that reason.
Oh, wow. So you have to do some research too, I guess,
Oh
before you
yeah.
even decide to get into this. And
Yeah.
I've heard you say a couple of time investors.
Hmm.
Can we talk a little bit about that part?
Sure.
When you say investors, can you elaborate on that? Who are your investors?
Yeah, yeah. So typically they're individuals. There's two kinds of people that invest a lot in our projects. So one is a person that has a successful career. They're in like the medical field, finance or tech or what have you. They're
Mhm,
making good money, they're doing well. They don't want to buy themselves a second job, and they kind of
mhm,
understand the value of their time. They're like, I mean, look, I'm not gonna learn and like try to flip my own home and like spend Saturdays like trying to,
mhm.
fix this deck, or like go into eviction court, like taking off of work on a Tuesday to go into eviction court, stuff like that.
Right.
And like they just want exposure into the private markets, into real estate. They want a team that's capable and knows how to execute on that specific asset class to help them make their money grow. So that's one bucket. The other bucket is business owners. So business owners, what's interesting is that they're very aware that income in their business really like it goes up and down, right? Nobody could have
Mhm.
predicted COVID, and yet
That's
it
right.
happened, right?
Mhm,
So
mhm,
so they recognize the value of their time. They're like, well, I want to invest in myself and my business and grow it more rather than like get diverted and like get distracted, right? So they also want to build cash flow. So they know that the cash goes up and down. So they invest in these assets so that it gives them cash flow. They know what's coming in. They can budget around that. So I'll give you an example. For me specifically, over the past almost 10 years, I've been investing in various what we call real estate syndications and private investments. Across like different asset classes with different investment firms, just to build up my kind of financial buoyancy. So
mhm,
becoming like call it financially independent is where your cash flows outweigh your expenses, and when that happens, it's really a magical moment that really can't be overstated for entrepreneurs, because are when you have that financial independence, you have unlimited runway for your business. Like you can
mhm,
like just not do anything in your business and you'll be fine.
mm.
It's not like it's burning a hole in your wallet. Like
Right.
your expenses are being covered.
Mhm. Well, that is good. And so now leaning in off of that and the investors, just say we have a gentleman or a female that's listening to you and they're like, this might be something I could try. But Leo, they don't have that much money to even consider it. How
Sure.
would someone who has a small amount of money get started in investing or managing mobile home parks?
Hmm. Now, very important preface, this is not financial advice. What I would do if I was in their position, because for our offerings, they're not right for everyone. Like the private equity world, for the longest time, it's been gate capped. I
Mhm.
worked at a private equity fund. Like their minimum check size is $10 million. It's like,
Oh,
who has $10 million to just do that? That's their minimum check size, Teresa. So
wow.
imagine what their maximum is, right? So for us, when we started our firm, we wanted to make it accessible for people. So our amounts are much lower. They're around 50,000 for the most part. It's not nothing, but it's not everything either. It gives people that kind of exposure that's meaningful to them, and like when their money makes money, it's like, wow, okay, that's pretty nice, instead of like, oh wow, it went from $1,000 to $2,000. Great. It's like Robin Hood. So to those people that maybe they're not there yet, and they want to figure out how to get there, if I was in their position, honestly, I would invest in myself. I've spent well over six figures on myself to become the person I am today, on various programs and just various ways to improve myself, improve my skills as a leader, as an entrepreneur, as an investor as well. And that could not be overstated, because the investment in yourself, you determine what the return is, not the market.
Well, Leo, You gave me goosebumps because that is so powerful. And then too, like what you just said, so that means we have to look at money really as a tool. So you use it
Oh
as
yeah.
a tool to
Yeah.
make yourself better. You didn't allow your money to control you. You controlled it, and now you're helping people get better housing.
Exactly, exactly. And yeah, when it comes to money, there's an interesting book I was recommended by someone by one of my coaches one time. It's called The Soul of Money by Lynn Twist. So it and there's also another book called The Psychology of Money by Morgan Housel.
Yes.
I think a lot of people, like, especially before the millennial generation, Gen Z and stuff, like talking about money is very taboo, right? They're like, oh,
Mm-hmm.
it's not your business to figure out how much I make and all that stuff.
Mm-hmm.
Um, and like back then, it's just a different mindset around money, and we were just given the wrong playbook. Like right now we're seeing, oh my gosh, like these guys in private equity, they're making a ton of money. How do they get there? Like we think it's some sort of like gentleman's club or boys club. No, I mean, I think like right now, like millennials, like Gen Z, like they're aggressively transparent. They're like, yeah, I mean, this is a good business. This is not. This is a waste of time. So they figure that, and they change their relationship around money. For me specifically, I don't really look at money as mine. I look at me as a steward of money, as a steward of capital. It's like, how do I put this money to use? Like, how do I bring the greatest value to the world? Right? Could it be that, I go on podcasts and I share my journey, building the businesses, like, and like going through all the toughness and like the hardships and stuff to like inspire other people, or like, how do I do it? Right? Maybe down the line, it's like, hey, let's create an after school program for, kids in high school. Cause if you're a kid in high school that's not a genius or a burnout, like chances are like the teacher's not paid enough to care about you. So like, how to get
Right.
that inspiration, blah blah blah. So yeah, just figuring out how to be a good steward of capital.
Well, that was powerful. That's almost more powerful than us talking about the mobile home parks.
Yeah.
But thank you so much for sharing that. And I'm hoping a millennial is listening and that this is just cranking them up because things are so expensive. And now, because all
Yeah.
this other stuff is going on, the gas is high, everything is high. And I don't want people to give up their dreams or their visions just because the economy appears to not being good.
Yeah. There's two kinds of people. There's one, well, it really comes down to the internal locus of control. It's like, how much of your destiny do you believe is truly in your hands? And whatever you believe in is generally true. And what you believe in will dictate the life that you have. So, for me, I aggressively believe that my destiny is within my own workings. So, if I'm being lazy, I'll be like, Leo, come on, snap out of it. Let's get back into it. What am I doing? How am I showing up for my team? How am I being a good leader? How am I improving the communities? How am I making my investors money? Like whatever, right? So, having that mindset, it's something that you refine through years, and
Hmm.
it's not immediate. And like, yeah, I mean, it's a muscle, right? Like you have to
Oh,
build it
yeah.
over time. See, like I thought, when I first went to the gym when I was 16, like I thought after a month of lifting, I'd become like really shredded, but I was quickly humbled and disappointed. And now I'm in, like, I don't know. I'm much too small to be this experienced at lifting, put it that way.
One day.
That's right. That's right.
So
Yeah, I'm working out the muscles up here in my brain. So yeah,
that's a good muscle to work because you're
that's right.
doing great things with that big, huge muscle that you have. And so, if we
Yeah.
have a young person like you
Hmm.
listening, what can you give us just a few steps of what you did to first even get your firm and to launch it? Like
Hmm.
did you have investors first before leaping out?
No, no. So, starting your own sort of private equity firm is really tough, because how investors invest in opportunities that have certainty to them. They
Mhm.
want to make their money grow. They don't want to lose money. So for
Right.
you, it's like, when you're starting out, how do you prove to them that you're going to be a good steward of their capital? How do you make
Mhm.
sure that it's going to grow? And it was a lot of upfront work. I mean,
Mhm.
for me, like building out this company, like bringing on partners that have more experience than me, that definitely helped. And to what I was saying earlier, like you focus on what's in your control. So bringing on partners and like figuring out ways to structure the deal so that it makes sense to them, so it feels to them like, okay, it's not that much risk, or like the risks are being defined and mitigated. And also just like yourself, like I control what I can control, which is my time investment and effort into the business. And like I've worked 7 days a week for ever since like we started the firm. This is our like fifth year in business, fourth year in business. So I mean, and like I've been in real estate for almost a decade now. So just like putting every waking hour into the business, into like how do you become a better operator at the asset class that you're working on. So that's a couple of ways to do it.
Wow. And this came to my mind because, like I said, I was a mobile home owner.
Yeah.
Can you let the listeners know, like, depending on the mobile home lot size, you can have what, like 100 to 200
Oh yeah.
mobile homes in
Yeah.
one lot.
Yep, yep. So yeah, I mean, in one property, there could be like anywhere between like 5 and like 500 of these lots, and you'll see like Sun Communities. They're a big REIT that have mobile homes as one of their strategies. You have Blackstone, Equity Lifestyle, Apollo Group,
Mhm.
a lot of those guys. Like if you look at the communities that they're managing, you're like, whoa, those are really nice. Those are better than my house even.
Uh-huh. Uh-huh. So, okay, then my last question for you is, when you were looking at these lots, you don't buy raw land yourself and then set it up, to get the septic done. Like the raw land, that
Right.
would be a huge job.
So, yeah, I mean, as investors, you wanna make sure that the math always adds up, because if it don't make dollars, it don't make sense, right?
Mhm.
So, when
That's
it
true.
comes to development, yeah, when it comes to development, there's a certain degree of risk to it, because you want to get your project approved. It might take longer than you expect. There might be
Mhm.
cost overruns, right? Like material costs, labor costs. Labor costs have gone up a lot. I mean, it's great. They're paying people more. That's great.
Mhm.
But
Mhm.
what it comes down to, it's not in a vacuum. It's just going to make everything more expensive. It's going to make
Mhm.
developing this more expensive. So then we're like, okay, well, based on this project cost, we need rents to be at here for it to make
Right.
sense. And it's like, could the market bear rents here? If it doesn't, you're like, it's not worth it. So for us, we like existing projects that they've been maybe a little bit overlooked. They just need that new life into them. So that's kind of primarily the projects that we go after.
Okay. And then can you tell the listeners, how do you go about locating these lots for sale? Because it's not like you can, I guess, go on the internet and just say mobile
Yeah.
home parks for sale.
Yeah, yeah, absolutely. So it's a whole big market now. I mean, you can Google like mobile home parks for sale. It's on Crexi, it's on LoopNet. We're on all the broker lists. They send us deals. We build out a team to go direct to seller as well. To have conversations with them, because for the sellers, for like the owners of these communities, there's a lot of what we call like individuals or like mom and pops that
Mhm.
they've lived in it themselves. They've ran the
Mhm.
property for like 40, 50 years, and like it's time to retire. So sometimes like they really care about who's running the property next. So
Mhm.
getting to know like, hey, it's going to be us, my partners, our employees, staff members, like running this. So like you're speaking to us, like we're the decision makers, and they care a lot about that. And we're able to create win-win arrangements to,
Mhm.
help them transition to that next stage in life.
Okay. And so I have to ask you this. So if someone decides to go this route and they have to get a loan, is this considered like a commercial loan or is this a mortgage? What type of
Yeah.
loan is this?
Yep. So it's typically commercial loans. So this is like 5 units and over. So it would be considered commercial property. And the good news is that because of all the REITs and Wall Street guys that have kind of paved the path for us in this industry, it's pretty easy to get financing for these properties, because even the agencies like Fannie and Freddie, like they see this asset class for what it is right now. It's very stable income, and people like the occupancy for these properties. It's just like it's mind-boggling when you first hear it. So the average tenancy for a multifamily would be around like a year, maybe 2 years, right? Like
Uh-huh.
18 months on average, as
Mhm.
opposed to like over 10 years for a mobile home park, because the value is so compelling. People want to pay down their note because they own the home, they build that equity, they could sell it and make a profit. So like why am I leaving beforehand? So they're just there for that much longer. Banks like predictable income, so
Mhm.
it's very easy to get loans for this asset class. Now, obviously, they care about you as an operator. You need to have experience. You need to have a resume, of course. And it's always
Mhm.
hard. It's always toughest to get that first one. But
Mhm.
afterwards, it gets easier.
Okay, perfect. Well, before we sum up our conversation, I always like to ask my experts if they could leave at least one nugget with our listeners. So if there's one good piece of advice that you can leave for the listeners, can you do that for me, Mr. Leo?
Yeah. It's to have a longer time horizon for your investment in yourself. And people tend to underestimate what they can do in 10 years, but they overestimate what they could do in a year, right? You hear Tony Robbins said that. And it's really powerful because, I mean, you look at where you were in 2016, and you compare that to now, you're like, all right, I did pretty good. I did pretty
Mm-hmm.
good. But you have to be consistent with it. And, I think especially people that are, newer to like entrepreneurship, or like, they newer to like taking charge of their own life. It's like
Mm-hmm.
you need more repetition. And the easiest analogy is just like when you go to the gym, like how many times you have to go to see your abs? A lot. So apply that same logic to your life. How many times you have to work your mental muscle, your
Mm-hmm.
willpower muscle to get life going in your way? It's going to be a lot. So keep that faith. You have the power. You just need to believe in yourself and do it and stick with it.
Well, that was fantastic. Thank you so much for that nugget. Look, it was inspirational to me too. So thank you for sharing that. And Leo, I want to thank you so much for joining me at Bartell's Money Talk. And I look forward to hosting you again.
Definitely. Thanks for having me on, Teresa. And to the audience, take action. It's so easy to listen, but just do something, just do one thing after this episode, and your future you will thank you.
Well, guess what we didn't do?
Yeah.
It's very important to me that I always allow my guests to provide their contact information, your platform.
Yeah.
So if someone wants to get in touch with you, please give us the best way to find you.
Yeah, yeah. So two main ways to reach out. A, if you want to learn more about our team, mobile home parks, potentially getting on our investor wait list, you can go to our website at cornellcommunities.com. That's CORNELLCOMMUNITIES.com. Or you can reach out to me on LinkedIn or Instagram. My LinkedIn is Leo Young, LEOYOUNG. Instagram is Leo Young Real Estate.
Okay, big ballers with all that money. Did you hear him say wait list? So if you have that capital, or if you know you're going to be coming into that capital, I recommend that you contact Leo and see if you all can work out some type of deal. All right, Leo, again, I want to thank you and I will see you the next time.
Thanks so much, Teresa. Have a wonderful
You're
day.
welcome. You too.